All right, let's jump right into this. Welcome to The Explainer. We've got a truly fascinating set of market data today, and honestly, it's telling a massive interconnected story. We're going to decode the latest intelligence from Big Bro's weekly money dump, specifically the May 11, 2026 edition. What we're actually seeing here is the undeniable confirmation of an accelerating infrastructure cycle. And I mean everything, from the physical, heavy-duty nuclear power needed for AI data centers all the way to the digital plumbing of crypto. If you want to know where the smart money is moving right now, you absolutely need to see how all these pieces fit together. Here's a quick look at our roadmap for this explainer. We're going to start wide with the macro market shift, then zoom into the corporate winners driving this growth. After that, we'll look at how crypto is morphing into financial plumbing, dig into a hidden AI ingredient, and finally, chart out the week ahead. Okay, part 1, the macro market shift. So the big overarching theme right now, we're looking at a market that has completely shaken off those recent war fears. It's squarely back to pricing in strong fundamentals and this accelerating AI infrastructure cycle. Just look at this number, 7,398.93. That's the S&P 500 hitting a fresh all-time high. I mean, we've just witnessed 6 straight green weeks for U.S. equities, completing a flawless V-shaped recovery from those war lows we saw not too long ago. The fear index, the VIX, has totally normalized from its March peaks. Basically, the market is screaming at us that the war risk was completely overpriced. That premium, it's gone. Investors are back to focusing on the reality that major U.S. companies are absolutely printing money right now. That discipline during the really scary weeks of March is turning into some serious alpha this May. And the foundation driving all that market confidence? Well, it's the April jobs report. Now, the consensus, everyone expected the economy to add around 65,000 jobs. But the actual number? A massive 115,000. It practically doubled what people were expecting. But here is the really critical part. While job growth totally exploded, average hourly earnings cooled down to just 0.2% month over month. So we're getting really strong jobs, but cooling wages. Right, so what does this all mean? It creates what economists love to call a Goldilocks environment. Not too hot, not too cold. It's kind of the economic equivalent of losing weight while gaining muscle, right? You're getting this strong employment without the wage inflation that normally forces the Federal Reserve to keep interest rates sky high. And let me tell you, this is the absolute perfect setup for the incoming Fed chair, Kevin Warsh, as he takes the reins from Jerome Powell. Warsh is inheriting a labor market that gives him the exact cover he needs to start cutting rates, assuming, of course, inflation cooperates. Moving on to part 2, corporate winners driving growth. So the macro data looks fantastic, but the actual companies are out there actively backing it up. We're seeing several major players validate this bullish thesis with some truly incredible earnings. Take Vistra, for example. They just delivered a massive EPS beat of $2.89 versus a consensus of $1.94. Guys, that's a 49% beat. We aren't just talking about a little outperformance here. It is a category-redefining quarter for a utility company. It 100% confirms the thesis that physical nuclear power is absolutely essential to fuel the massive energy demands of these new AI data centers. The source frames this perfectly. They said Vistra missing earnings back in Q4 and causing that whole panic was just like a star player having a bad playoff game, and then they come back the next round and drop 50 points. The underlying business was never actually broken. That Q4 miss? Mostly just weather-related noise. Their core asset, which is nuclear power locked into these 20-year contracts with titans like Meta and Amazon, remains completely untouched and honestly incredibly lucrative. Then we have Uber, delivering a blowout corner that perfectly showcases their dual moat. On one side, you've got their loyalty business. Uber One just hit 50 million members, locking in massive, reliable, recurring revenue. But then, on the flip side, you've got their call option on the future. Autonomous vehicle trips grew more than 10x year over year. It's crazy. You're basically getting an underpriced quality company with explosive future optionality all bundled into one stock. And let's briefly look at Goldman Sachs. They actually pulled an A- grade in this week's report. The business is running flawlessly. Dominant M&A positioning, record equities trading, and there's a massive AI transformation underway. But, the minus is there because the stock is trading at 2.5 times book value. Look, the premium is definitely earned, but it means new entry positions require a bit of patience. The food is excellent, but the prices already reflect those Michelin stars, if you catch my drift. All right, Section 3. Crypto becomes financial plumbing. Listen, if you've been treating crypto as a side quest, it is time to pay attention. The whole narrative has completely shifted away from the hype and moved straight into foundational financial market structure. Bitcoin just achieved a huge structural breakout, finally closing above the $80,000 wall at 80,875. And let's be clear, this isn't just a price bump, it's a structural event. Bitcoin has reclaimed its 200-day moving average, exchange reserves have hit 7-year lows, and those whale wallets, they accumulated massively in April. With the war premium fading out and a new Fed chair who literally refers to Bitcoin as new gold, the macro setup here is just perfect. But what's really driving all this is the wave of institutional adoption happening right now. BlackRock is launching tokenized money market funds on Ethereum, basically turning tokenization into a boring, reliable cash management product. Meanwhile, Morgan Stanley is putting Bitcoin on E-Trade for its 8.6 million clients. That line between traditional finance and crypto, it's rapidly disappearing. Crypto is just straight up merging with traditional financial plumbing.
Just look at Kraken applying for a federal bank charter. I love this analogy from the report. It's essentially the crypto version of a food truck applying for a Michelin star. You don't do this because the regulations are easy, right? You do it because unlocking FDIC oversight and federal charter status gives you the ultimate legitimacy. It's how you attract the serious, heavy-hitting institutional money, like pension funds and sovereign wealth funds.
And honestly, this might just be the most fascinating infrastructure story of the week. Amazon and Google Cloud are literally wiring AI agents to stablecoin payment rails. They are out here giving AI agents their own crypto wallets so they can autonomously pay for data, APIs, and services using USDC. No way, right? But it's happening. Stablecoins are quietly becoming the base cash layer for machine-to-machine commerce, bypassing traditional credit cards entirely. Now, obviously, all of this requires clear rules, which is exactly why the Clarity Act is so important. Heavyweights like Coinbase and Kraken are actively lobbying lawmakers to shape this legislation. And guys, this is what real progress looks like. Crypto has moved from standing outside the tent throwing rocks at regulators to sitting right inside the tent helping write the rules for the future of the market structure. Moving on to Section 4, the hidden AI ingredient. So taking a sort of microscopic pick-and-shovel spotlight on a company that most retail investors completely overlook, but one that is absolutely vital to the AI boom, we really have to ask, what is the invisible ingredient inside every single advanced AI chip? Look, you know NVIDIA, you know TSMC, but do you know Integris? This is a $22 billion company providing the ultra-pure chemicals, the specialty gases, and the filtration systems that keep those massive fabs running. Every single advanced chip made by TSMC or Samsung goes through Integris products. They are literally operating a toll road on the entire AI build-out.
Their core thesis relies on what we call a double tailwind. First up, global AI expansion means TSMC and Samsung are running their fabs at absolute maximum capacity, which drives massive volume. Simply put, that's more total wafers. But second, and this is key, as chips get increasingly complex, moving down to those crazy 3nm and 2nm nodes, the manufacturing process requires far more precise filtration and a whole lot more specialty chemicals. So Integris actually gets higher revenue per wafer too. Both the volume and the price of their products are rising at the exact same time. It's a fantastic setup.
And finally, Section 5, navigating the week ahead. We've got an absolute economic gauntlet coming up over the next few days that is going to rigorously test this bullish market thesis. Here's the timeline you need to watch. Tuesday is the big one. April's CPI drops on the exact same day the Senate is expected to vote on Kevin Warsh's confirmation as Fed chair. The headline inflation number? Well, it'll likely look a bit hot because of gas prices. But the core CPI is what really matters here. If core comes in soft, Warsh gets confirmed right into a perfect environment for rate cuts. Then Wednesday brings PPI data, giving us an early read on the wholesale inflationary pipeline. And then Thursday we get Walmart's Q1 earnings. Because they literally serve about 90% of the U.S. population, Walmart earnings are basically the annual physical for the American consumer. You really need to listen closely to their commentary. Look for mentions of consumer stress, basket sizes, and whether shoppers are trading down to private labels. That's going to reveal the true on-the-ground health of the everyday economy. All right, we have covered massive ground today. We're seeing a market aggressively shaking off its war fears. incredible corporate earnings from the likes of Vistra and Uber, crypto becoming the actual rails for AI commerce, and invisible giants like Entegris quietly powering the whole chip revolution. So, I'll leave you with this final provocative thought. As the market rebuilds its financial plumbing for the next decade, are you positioned for this new infrastructure cycle, or are you still pricing in last season's fears?